I thought I'd try and do some analysis on Facebook, um, in particular, how I could have played Friday's trading. And I'm going to go bar by bar. Um, and in some cases, I may actually ignore certain bars and just kind of give you a sense of what I'm doing. So I'm going to create a brand new page. In fact, maybe we'll just use clean. All right. Um, as you can see, Facebook is, if we just pull back, and we are in a broad ball channel. So if we look at, say, the 1 hour time frame, okay, because they're doing maintenance. The guys at TD Ameritrade are doing maintenance on the server. The 1 hour time frame is not working. But anyway, so we're in a broad ball channel, and essentially what that is um, we're getting, for every high we get a bit of a low, a high, a low, a high, a low. So the channel's broad. So here we have a bull breakout and then a pullback, then another bull breakout. So what we do, we join these highs, and there we go. All right. So this is this particular part of the channel, but we're not interested in that. We're interested in the entire channel. So this channel has kind of lost momentum, and so what we now do is we take this high. We obviously are considering this low, and we extend that to that, and that to that, around about there. Okay, so this is the new channel, and as you can see, we've broken out there, and therefore we draw a new channel from the last high to this high, extend it to the lows, and we have this. Okay, then we have this low, so we take this high, this low, this, and we take this last high, extend this to this, extend this to this. So this is the new channel. All right, let's just get rid of all this and kind of make things a lot clearer, right? Because it's just too many things going on there. So we're really interested in this area. This is our last high up here, so we're going to mark that. And I think if I double click that, no, it doesn't work. Okay. All right, so this is the all-time high. So what we do, let's just put that in here, all-time high. And we're kind of in a trading range, or we have been in a trading, well, we are in a trading range because we've not taken out this high, and we've not made a higher high. All right, so that's essentially where we're at right now. Okay, so typically whenever we have broad bull channels, rallies and breakdowns get bought up and they form new highs. So whenever you have price moving high, you get this exhaustion, trading range, pullback, and we have this trading range here. Then we have a breakout of the trading range. It gives you an impression that we're now in a bear trend, but actually this price, this was the last major high, so this price is a very important price. We made a new high from this price. Okay, and then this, what's the measuring gap? Doesn't matter right now. I'm trying to, if we take this high and measure this, no, because to meet that target. Instead, I'm trying to see, maybe it was this. Alright, this looks more like it. I may be wrong. So essentially taking the low of the trading range to the high of the trading range, the breakout leads to the target, sort of thing. But anyway, doesn't matter. That's by the by, so I'm going to take this out. I may be wrong, because normally I always measure it from here, because this now is the trading range. Alright, so we're in a new range from here to here, right? So this is the base of the trading range here, and the last, well, now this is the last major low, but this is the last major low before this low. Alright, so we now have double top, 3 legs down, or 3 pushes down, 1, 2, 3. This was a sell-off, pulled all the way up, but it never took this out. We then went into a trading range, and then we Did the same thing here, 3 pushes down, and up. This is the 2-hour time frame. Let's go to the 5-minute time frame, which is the time frame we generally trade. Now, if we look at how we've been trading on this time frame, clear uptrend, around about there, and here, right? Clear uptrend, and then we now had a bear trend, or you can call it a bear leg. And let's just use this for now, because this is actually what happened. We know what's happening. All right, so this was a breakout. So the way we analyze this on a day-by-day basis is this. We look at the previous day, and let's look at this day and this day. So we had a bull breakout, made a higher high on that breakout. So this is an important price. As you can see, we had a pause here, and price went up. New highs. So generally when we get to new highs, we have a wedge up here. When we get to new highs, traders tend to sell and take profits, right? So you can imagine you bought this signal bar from the previous day at the open, and you got this bull breakout. You start looking to take profits here, which is essentially why we're having these wicks at the top. Got a final flag, and then bears shorted, and bears are targeting this level, or at least this level. At this point, what do we have? The next day, we come down, pull back, and then we come down eventually. And as you can see, the bears did target. They did target this level, but they didn't make it that far. Anyway, we pull out of the channel, and initially what I used to do before is whenever we broke out this channel, I always assumed that therefore whatever we had would result into a bear trend. I was not aware of the fact that actually whenever you have this, bulls tend to buy these breakouts and push the price above the previous high. So it's just something that broad bull channels do. So for instance, now this is a good example here. Breakout, pullback, and as you can see, we broke out of the bull trend, went into a bear trend, and then it now became a trading range. We now broke out of the trading range. It was a small bear trend, but you can call this a pullback on a higher time frame chart, and this got bought up. Same thing over here. All right, so Friday's price action. I mean, I actually took this long around here because looking in pre-market, we had a double bottom. But if, say, I'm not looking at pre-market, and I want to do this bar by bar, because the best way to trade is to not have any expectations of what's going to happen and just make decisions based on the price action. This price action as it is right now, this is a parabolic wedge. 1, 2, 3. Actually, it's just a wedge, but 1, 2, 3, right? The reasons why this tends to work pretty well is because the psychology actually makes a lot of sense now. If you think about it, if you have a trend line drawn from here to here, these 2 points, and let's actually correct this. Actually, no, let's leave it. No, let's correct it. Let's correct it because this, we're assuming this point doesn't exist, right? So let's say, for instance, now let's just join that point, and then we join that point like that. Okay. So the only time you will draw this particular trend line is when this new high, this high, and this low have this channel have established themselves. And then what happens is price retraces all the way down here on this particular day, and as you can see, the bulls bought on this level because they were looking at this level, right? And the third time it happens, because it's happened twice already, and we've established a trend, you're going to get a lot more people buying here. It's just psychology. Everyone is looking at this point. Three touches tend to cause a lot of conviction. So as a result, wedges are very reliable like that. So you have one, two, three, and this setup always tends to cause reversals. That's the reason why wedges work. But anyway, so excuse me. So on Friday, yesterday, we had a minor bear trend inside this bear leg. So you can imagine this bear trend here, double top, down, let's join these lows. And I mean, at this point, because of what's happening, I mean, I would have drawn this way, then you had a breakout, but now I'm drawing this. Now, this is the minor bear trend that we have, right? And this is what your setup would have been like. The moment you see this bull breakout, this is a trend change. Reasonable to buy this bar, the top of this bar, or the close of this bar, putting your stop over here. Really bad follow through because we're trying to get past this resistance. So what's actually happening is this resistance is being tested. So you have a double top pullback, more buying coming in because a lot of people, a lot of conviction here. Very bad ball follow through, really bad follow through, but lots of bulls taking profits, lots of bears taking profits. We actually do have a wedge here. If you go on a lower time frame, you'll actually find that this forced, we will have a lot of selling here, but then this also led to a lot of buying. Let's actually look at that on a 1 minute time frame. So if we look at the 1 minute, there we go. So we have that wedge. Remember what I said about wedges? They tend to form a lot of conviction. So you get a lot of bears selling here because this is the third touch. But it was a failed wedge. A lot of people, a lot of bulls are buying on the moving average, on this time frame in fact. So this was a failed wedge, went sideways for a bit, and no conviction. So a lot of bears gave up, and then you have this breakout bar, and this caused the massive breakout. So we go back to the 5 minute time frame. And this is literally how you would trade this, looking at this bar by bar. Right, so we now finally have this time frame, finally broken out of this level, reasonable to move your stop from here to the base here, or even this bar, right? Cool, okay, and then bulls were eager when this bar closed. A lot of them bought this bar, as you can see the bar opened here. We still had a lot of bears selling and probably some bulls taking profits because they were probably disappointed with this bar. A lot of bulls bought this bar, came back down, but they made sure, a lot of bulls made sure that this would not hit their stops, and they pushed the market higher till we got to this level, which I have marked. That level is the high of the previous day. So this high was taken out already, which is why we have this. So that's the test here, but lots of buying came in, and this, because again, and the reason why lots of buying is happening is because we're in a breakout. Bulls are closing on their highs, but more bulls are buying. Every time a bull closes, more bulls buy, more bulls buy. We get to this high, right? And what's happened over here? We have a doji, right? And it's a bear doji. Lots of bulls are taking profits here because their risk is so high, they want to pull back. So what ends up happening is most bulls who have put their stops here are all taking profits all over here. But there are some bulls who are buying over here because this bull bar has closed on its high, and they're disappointed with this bar. Some of them gave up, which caused this big, massive bear bar closing on its low. And the same thing happened with, and because of that, a lot of bears shorted as well. Now, when this happened here, a lot of bulls bought, more shorting and everything, and then we had what we call this is a high 1 signal bar, this is a high 2. High 2s are high probability trades up. So if you just mark this channel down here, 2 legs down, high to buy, and then you now have a retracement. So now the spike in channel has started, channel phase has started. The next low is here. So what we do is we join this low and this low. So this is the new trend, as you can see. And we join this high to that. So what's happening here is we have one pullback, bear and bull breakout. So now this is where I start to ignore the bars, a bit more of the bars. So if you notice, we have a bear leg here. So essentially bulls are looking for value. Sometimes it happens on a 50% pullback. In this case, it didn't happen that way. This is the 50% mark, as you can see, which coincides almost with this high. But anyway, they got about 25%. So I think this was the level the bulls were looking at based on this level. So this is the measuring gap. But anyway, so bulls bought this because a high 2, very high probability buy. This is a high 1, but this led to a retracement, pullback, high 2. So more bulls bought the high of this bar, and bears shorting, looking for a lower high double top. We now formed a triangle from here to here and here to here. Bull breakout, double bottom, trend reversal. So this formed another bottom with that, which is obviously what has led to this trend line which I've just plotted. One leg, another test of this high, pullback, bull breakout, which is why this bar is so big. And this itself is actually the breakout testing this high, pullback, but this level is now support. So we have 3 legs, 1, pullback, 2, pullback, 3, actually 4 legs. Bulls tested this level. And remember I said bulls will sell or take profits at new highs, especially when this is a channel that they're trading in. All the computers are using this channel. So price got to this level, and you can see we went sideways, then came down. Let's extend this channel. And look at what happened here. 1, 2, 3. 3 pushes up. This is a wedge, double top, bear breakout. So now we should expect price to trace down a bit. Where to, God knows. But if you were trading this, this is how you would trade, or you would have traded Facebook. Especially if you're always in long, essentially, if you had decided that you were only, if you wanted to be in the market, you're only going to be trading long, you would look to buy all the bull bars that are closed on their highs. I mean, obviously you can't take every one of them, but you're looking at most of them. And then when you had retracements, you would buy the bull bars closing on their highs, because every bull bar that closes on its high is a breakout, if you think about it. So for instance, now this is breaking out of this. This bar is breaking out of this. So every time you notice you see a big bar like this, is breaking out of a bear trend. This is a small pullback bull trend, because if you look at it, every single red or bear bar, apart from these, is being bought up. This actually has taken this out, so we call this a low 1 sell signal bar, but the follow through is really bad. So bears gave up, broke, bull breakout, bull breakout. Here we're going, another sell signal, took this one out. So imagine, you can think, this was once a red bar, and this would have been a low 2, so it would have been a double top, but when it closed on its high, which is a good signal bar to go long. Right? And this thing as well is a bull breakout. So this bull breakout is still going up. 1, pullback, 2, and then 3. This itself is a wedge, which is where the bears would have tried to short. Bad follow through. You had a bull bar and a bull breakout. Almost looks like exhaustion because these are such big bars. As a result, we go sideways. Then we had a bear breakout over here. So this level was taken out by this give up bar. So essentially you have the bulls who have been trading in here, buying low, trying to push the market higher. But they're exhausted at this point. This is too much buying, and also there are lots of sellers on this level. If we look back onto a high time frame, oh no, even the 30-minute doesn't work. So let's go on the 2 hour. Yeah, if we look back on a high time frame, round about that level, this would have been my supply level. But round about here, you can see we have a lot of selling here. So basically, bulls who probably bought around here are taking profits around there as well, and bears are selling here. The ones who were selling here are selling again. Let's go back to 5-minute chart. I used to find trading breakouts, this is a breakout, I used to find them very difficult because I could never ever tell what was going on. But having understood and analyzed every single bar and then seen this bear breakout, I can definitely get an idea of what's going on. We may even have a wedge, possible wedge, bottom from this low, second low. Be interesting to see at the open. We may get a gap down or a sell off. If price opens here, we'll probably most likely sell off. As to how far we would go, we'll probably be targeting this level, and if we do, this will then now be our trading range for us to trade sideways for. Now, why do I say that? Because that's generally how price works. See, we sold off, targeted this level, tried to get even higher. Bulls are targeting this level, didn't get there. This was a level. Whenever your next high is here, chances are you're going to get further prices lower. So bears would join this high with this high and join the lows. And essentially you would then now look to take shorts. So you would look for a signal bar low. So this isn't a good signal bar. This is probably an okay exit, okay point to take your trade short. But not really an amazing signal bar, even though I may take it only because I think we're in a bear trend. This was the last high, this is the next high, so we're already going down. I would then now draw this line as we've just drawn it, and this would be my target. So I would then now take a short, this would be my stop, or possibly this could be my stop, and target this level somewhere here. And as you can see, that's exactly where the bears took their short. So that's 3 legs down, 1 pull back, actually 2 legs, 1 pull back, 2, almost 3, and then you have a wedge here, 1, 2, 3. Bulls would buy this area because again they've established that this is the trend line that the bears are using. And as you can see, we have a buy bar here is a high one. It's not a very good signal bar. Actually, this is the high one. I don't like this signal bar. The risk is too high. As a result, a lot of bulls did not buy that bar, which is probably why you have a doji. I'm sorry, yeah, it is a doji. A wick on this bar, and then gone sideways. This is a better signal bar. A lot of them bought this, and as a result, you had follow through. Double top, bears pushing down. The trend is going weaker, so we take this now, and this now becomes the new trend to this point. And as a result, now they're selling, hoping to get down here. Bulls will not let it get there because they are using this point, and therefore broken out of this level, which is again, if you notice, the second level we've drawn, price stopped over there, broken out of that level, and I can tell you now that again, you could draw this level to this level. This could now be your trading range, which we've just done. As you can see, that's why price stalled a lot. I remember when I was watching this, I wasn't thinking about this at all, and therefore was not really sure what was going on over here. But having looked at this again, I can see now why we're stalling at these levels and why price is stopping at these levels. And then here we have the breakout, obviously, of this level up. So each bar is telling you what the bulls and bears are doing and how they're moving the price. I know there are lots of lines on the chart, and that's usually what ends up happening during the day. And you have to keep watching every single bar attentively. At the time when I was trading it, I did mark these. I marked that, and I marked that, and I did mark that. But there are so many other lines I should have marked as well while I was trading. Another thing that is of interest to me right now is the fact that on, say, the higher time frame, we have formed a wedge 1, 2, and an overshoot 3. So we are going to most likely sell off. I'll just join this low to this low. Oh, doesn't matter. I'm using the wrong trend line. Join this low to, and you can see it touches this low and it is touching this low. So that also tells you why that is the low they have used. Trend lines are so powerful once you know how to use them. But I think the mistake I find most people make is they only use the trend line that they're breaking. They don't use the base and form a channel. And channels are so relevant. This is also a really good place for supply. So this is a new trading range. So whilst this was the previous trading range, now the trading range is now gone. Now we're using this high for the trading range. Like I said, we may have a sell-off and the price may come to test this level or test here because we have such a big buy here. All right, I thought I'd just share that. We're going to be doing more of this pretty much as often as possible. I would love to get comments. I only do this for my own purpose, but I realize now more people are looking at this YouTube channel. If there are things that you guys want me to talk about, let me know, and I will share as much as I can.